Welcome. Today we will share some observations from the second quarter reporting for a selection of insurers. We'll hear some perspectives from the industry and also from the audit side. My name is Kenneth Fegri. I'm leading the insurance team within CFO Advisory here at EY. And together with me in the room, I have Caroline from the same team and Kjetil, an auditor leading our services to the financial services sector. And from Stockholm, we have Camilla with us. Would you like to give a short introduction of yourself and Nordea Life and Pension, which you're representing?
Sure. So I'm Camilla Stenström. I'm the Group CFO for the Nordea Life and Pension Group. We are a pension group with 5 key legal entities. We have companies in Norway, Sweden, Finland, and Sweden, and we're managing about 74 billion euro in asset under management. My background is I've worked with life and pension and specialty insurers across the Nordics and also worked quite a bit in London and the UK market over the last 15 years, and I have done various roles at Nordea, but the last one was sort of doing treasury and capital management for the group, and now since about a year back I'm managing the group CFO role.
Thank you. Interesting background, and we're looking forward to hear your perspectives on the topic around IFRS 17 and reporting. Before we jump into that part, we'll hand over to you.
Also presented a CSM breakdown in the investor presentation, and that is new for the quarter. And it's also worth mentioning that a few insurers, for example, the Finnish Taaleri, they included the CSM release, but not the balance itself. So I think we can say that in total, given the variation in the IFRS 17 disclosures and the minimal changes since the Q1, there seems to be a way to go on until the disclosures are homogeneous enough to be easy to compare as we originally wanted with the IFRS 17 standard.
Let's hope it's okay for now, and we'll continue. And really sorry about that. As we said in the beginning, this is actually our first time using this new studio in our new office, so please excuse us. All right. As Carolina said, maybe as expected, maybe not the biggest changes in terms of what the insurance companies are reporting in terms of the structure and the content. Of course, the numbers have been updated as of Q2, but I guess this is a period where companies are settling in and also preparing for the annual reporting a bit later. But getting back to you, Camilla, hopefully you will be able to hear us now.
Yes.
Having worked with this topic, IFRS 17, for a while, what is your key takeaways?
No, I think it's a massive change for this area, for the CFOs and the whole finance teams and involved in reporting under this new standard. It's quite complex, and it requires a lot of us, and it has also brought, I guess, coming from a bank insurers, it's also brought, I guess, finance within the bank insurance group close together, because there's been a need to really understand what's happening within the insurance area that hasn't maybe been so material before.
That sounds familiar, and I think we've heard this from other companies as well, that increasing collaboration across different teams and departments within the companies is one of the positive sides of the new standard. But I guess you already mentioned a bit about like the positive, maybe also on the more negative side, but could you share some more thoughts on like the pros and cons of the new standard?
Sure. I mean, I think on the pro side, like I said, I think it has opened up new ways of collaborating across teams and across finance within the bank insurance group that hasn't maybe been there before. And I think also I hope that in the end it would also provide the intended sort of transparency for the investors and analysts going forward. But I think on the con side, I think it is very complex. It's not always so easy to make a direct linkage between what's happening in the markets and what we're actually seeing in the results, because products move in sometimes in opposite directions, based on just one single market movement, and hence the sort of net result of that move is not maybe always intuitive. So it is, and I think a bit like you mentioned before, it requires a lot of us. I mean, we are now reporting, we're doing everything that we did before and everything new, all at the same time, all under the same deadlines that we had for the reporting period. So that is a challenge for everyone involved.
Yeah, I can imagine. But you've done this for the second time, at least officially now. What was the biggest change or the difference from doing it the first time in Q1 to now in Q2?
Well, I mean, we run the whole process every month. So, and I think with every reporting period, we're getting wiser and more comfortable with everything that's going on. It has, a bit like I mentioned, it has been a big change, and we've had to really work a lot with making the process very efficient to kind of fit everything in. And I think it makes a big difference every time we do this, and the learning curve has been quite steep as well throughout this year.
And then I guess that will continue.
Yes, it will continue for a while, I think.
You mentioned kind of the investor perspective, and I guess that's one of the things or the reasons for why this new standard was developed. But what has the investors asked you about? Do you see any kind of change compared to Q1? Have they kind of learned what this is about?
Maybe not so much a change between the quarters, but I mean, the feedback that I'm getting from the investor relations team is that the investors and analysts still find this quite challenging. We hope, like I said, that long term that it will increase the understanding, and that we will see the full benefits coming across to them. But it is, on a very practical note, it's a new income line to sort of model and put a value against. And it's not always so easy to kind of deduce or follow what's happening in the market and follow that all the way through to the result. So they're saying that they hope that the full benefit will come through, but it probably will take a long time before we sort of get there.
Yeah. Kjetil, from your perspective, I guess you're also following the analyst community. Does this kind of resonate with your understanding?
Yeah, I think the analysts, they are struggling. They tell me that they will still try to find the old IFRS 4 numbers from statutory companies registers and things like that, just to have a benchmark to see how things develop.
Yeah.
So they are still in the training phase, I would say, to really understand how to follow the business going forward. And there's a lot of noise also for the moment with interest rates going up all the time, and then affecting IFRS numbers significantly. So they are a little bit puzzled. I'm not confident, I would say 100%, but investors and especially financial analysts, they try to keep calm and look serious. But behind the serious mask, I think they're struggling a little bit, to be honest.
As we said in the beginning, you're an auditor. What do you expect in terms of the audit of IFRS 17 now that the annual reporting is approaching?
Yeah, I think at least three things. And Camilla, I will probably repeat some of the things you said also. I mean, it will be different from last year, which is good to some extent, because then we are able to sort of think in a new way and not just turn the pages and challenge ourselves. And if you ask young auditors, they would like to have challenges. So I think we will be able to fulfill that wish. But on the second thing, I think there will be more work because, as Camilla said, we will have to do the same as last year. But on top of that, we have to do the IFRS 17 audit as well. And that is the third point, that we need to collaborate more, which is good. We need to have more interaction with the financial teams at the client side, and also work closely with other teams to make sure that we do the right procedures, because this is new. This is sort of what is sufficient. So we need to work more closely with actuaries. We need to work more closely with IT experts, because there's new systems and all these things. So I think we all need to be a little bit flexible this year, because and we will come back to that, I guess, all the new requirements related to disclosures, and also then ESG coming up. So it will be an interesting year end.
An auditor being flexible also sounds a bit interesting, but I'll leave it with that. How can the insurance companies prepare as best as possible for this?
Yeah, I think what I recommend at least first is to start really early with the disclosure requirements, regardless if you're part of a banking group, if you're a standalone insurance company, because there's a lot of new disclosures coming up, and find how can we capture the data for those new disclosures. Try to do that as soon as possible and discuss that with auditors before year end. That is, I guess, the key takeaway, because to try to work out and see if this is sufficient sort of level of disclosures after year end might be a little bit tough, given the timelines that we have. And also then focus on documentation on what you do. And I mean, there's a lot of new things that will come up now, and to be able to report will be number one priority, but to document what you actually have reported will be important, because there's internally you have a demand for information, but auditors, they claim that if it's not documented, it's not done. And hence, I think we both will save time if we are able to document. And there's a lot of other things that we can propose also. But I think, given the fact that there's so many new processes within the company, to be able to sort of go through the risks, the controls, and document the controls will make life easier moving forward.
I just realized, I think I forgot to mention in the beginning, but if you have any questions, feel free to ask them in the comments field, and we'll get back to them after the webcast. Is in the annual report, it will also be a lot of new disclosures and quite comprehensive disclosures, Kjetil. Any recommendations on this?
Yeah, as I mentioned, you need to prepare the disclosures before year end. I think that is key, and also to find the right level of disclosures. And there's also a new IS1 coming up now, sort of make sure that you disclose the right material set of information and not too detailed information. That's one thing. But in addition to then being able to find out where do you capture the data from, because that is something that the auditors will ask for, the basis for the details. I think it's also worth mentioning that there is an expectation, and we just did a survey on also the ESG part, like the climate risk. How do that affect the different part of the insurers set of financial statements? And that comes on top of the new IFRS 17 reporting. So and we have some good examples there, but it's very hard to recommend any specific details there. It depends if you're a life insurer or non-life insurers, of course. But there is an expectation from regulators that you also add some more disclosures to that part of the financial statements.
Good tips there. Camilla, because in addition to implementing IFRS 17, you've been doing a lot of other interesting things as well, and where one of them was actually acquiring a company. Could you say something about like how was it to do this in parallel?
Well, yes, it was. It has been a very busy year, and well, years maybe, doing the implementation. And I mean, we have acquired Topdanmark Life in Denmark, and we've also acquired another company in a smaller company in Sweden. So it's been very busy times for the finance teams to both, of course, preparing everything that needed to happen for IFRS 17, and then at the same time making sure that we could consolidate the new companies. So
yeah.
It's it's the timing was suddenly challenging. Let's say.
I can imagine, and I guess most companies feel that implementing IFRS 17 alone is enough. So,
yeah.
But based on your experience on this, anything that you would kind of mention or say that you should pay especially attention to when acquiring a company in light of IFRS 17?
Well, I mean, we've been fortunate in some ways that, I mean, the Topdanmark Group had its own IFRS 17 implementation that was already on the way, and we could benefit from, so to say. So in that sense, it was maybe less work than it would have necessarily had to be. So, yeah, I mean, it's as always, you know, it's very important to understand the evaluation of liabilities and so on, and you know, that was part of the whole transition, and we kind of had to do the evaluation as part of the purchase as well. So.
So your recommendation is to acquire a company that's already on IFRS 17, right?
Yeah, I mean, at least when you're implementing the standard at the same time.
Yeah. Kjetil, going back to you again, as an auditor, any views on this topic from your side?
Yeah, I guess it's already mentioned, but if you're targeting a company that hasn't implemented IFRS 17 yet, you shouldn't underestimate that you sort of the process that you have to go through to be able to report. But basically, what you have to do is to, if they're already on IFRS 17, is to recalculate, and there might be differences in assumptions and things like that at the time of the business combination when you obtain control. So I would recommend to read thoroughly the IFRS requirements in IFRS 3 and IFRS 17, because there's differences there compared to what you're used to. And I said, if the target hasn't yet implemented IFRS 17, it might be a long-term process in order to be able to report. And that should be factored in when you do a business combination. And also, if you're required to do a prospectus or forma and things like that, it might add to the complexity. And also for the auditor, then, if they are going to give some assurance on this for a prospectus, or for that matter, for an interim set of financial statements, the timeline should be really focused on.
Yeah. Interesting topic that I'm sure we will hear more about in the future. Caroline, last time we talked about that companies should focusing on strengthening their internal control framework now that IFRS 17 has been implemented. Why?
Well, the reason for why this is important is it's not like that changes because of the implementation of IFRS 17, and the concept behind internal control is still the same. But if we think of what we would like to achieve with the financial statement and also the IFRS 17 statement, we want it to be accurate accurate and timely as a foundation for internal management decisions and as information to external stakeholders. And in order to meet that, in order for the numbers to be accurate and timely, we need a robust control framework that is mitigating the risk of material misstatement, and it needs to be sufficiently efficient to provide the numbers in time.
It's nothing new in terms of internal control, but for many companies, it's a good time to kind of revisit what they have in place and also make sure that their new processes is covered within a sufficient framework.
Absolutely.
Could you say something about what you typically observe as like pitfalls or risks in terms of the internal control framework?
Yeah.
And also, how would you recommend to work with this?
Well, yeah, we do observe some typical pitfalls, and I can mention some of them. So, first one is lack of segregation of duties. That the same person is responsible for typically entering the numbers and later approving the numbers, which is, of course, increasing the risk of fraud and errors going undetected. And that is typically a result of a hectic implementation phase where the production of numbers has been in focus and also key personnel dependencies. So that is one pitfall that we typically see. Another one is lack of continuous improvement, meaning that if one identify a deviation, for example, when analyzing the IFRS 17 results, the numbers are fixed in that period, but there are lack of good procedures that make sure to go back and redesign the controls in order to identify such deviations at an earlier point of time in future periods. And finally, we also often see some efficient communication around internal control. A lot of companies still use Excel and email when communicating and documenting the internal control performance. So our advice here is to take a step back and get the overview and holistic view on the internal control framework, map out, for example, and try to identify where you have this lack of segregation of duties and consider implementing some kind of a tool to help facilitating the communication and the documentation around control performance. And that will also be easier when the auditors come and audit this to have that in place.
That sounds good. And we heard that Kjetil said earlier that the auditors will maybe spend more time at clients looking into this. So making it as easy as possible for them is probably a good thing. Camilla, I know that internal controls is of course high on the agenda on your side as well. What is your experience in terms of implementing sufficient internal controls for the new IFRS 17 processes? Because one of the things that we need to pay attention to is, of course, what you mentioned in the beginning, that this new standard also requires more collaboration across teams, for example.
Yes, and I think that's really a key point. I think overall the framework is at such a level that it, in many senses, is still the same. But of course, a lot of checks and evidencing and structures below that has had to change, and it also requires more from our teams in the sense that there's broader involvement from actuarial resources. I think also collaboration between the sort of finance and actuarial resources to really make sure that we have the right kind of insights when we do the controls and so on. So yeah.
I guess you talked a bit about kind of the challenges already, but what do you see as the biggest challenges in terms of internal control?
I think it is that maybe that we are, moving into an area where there is a lot more complexity going into the numbers, and then it is very important that we have the right people also doing the right analysis and getting involved early in understanding the numbers so that we can understand them in the right way, and we can do efficient checks throughout the process. And then I guess a bit like you were mentioning as well, Kevin, that it is time critical, and we are doing a lot of process at the same time. So you have to work a lot with efficiency as well, making sure that everything can be prepared in a timely manner.
Yeah. And I think the last thing you're mentioning is key here. Don't think about internal control as a separate thing. Think about kind of the end-to-end integrated process and make sure that you have sufficient control along the way there. Maybe I'll ask the same question to you, Kjetil, from an auditor perspective. What do you think are the biggest challenges in terms of sufficient internal control?
Yeah, I would say that just to go one step back again and say that this year there will be 2 sets of financial statements for a lot of companies, and it adds complexity, but also it's more time consuming. So companies will be stressed, but this complexity adds more risks, and to be able to capture all the risks and understand the risks and have sort of procedures to reduce the risks to an acceptable level this year. When we have little training, this is the first year, even if we have been through the opening balances and things like that, there are more estimates, and the estimation processes are quite complex. And it's not as easy as just sort of discounting a cash flow, because you have all this actuary, okay, call it like really complex add-ons to the estimation processes. So we really need to collaborate, and to make sure that this works, we need to sit down in larger teams compared to what we are used to, and really understand how to address the risks in a better way. So that will add some timing issues, like are we able to do this? And of course we will be, but good planning ahead is something I recommend. To set up a good plan for this, and do not underestimate the potential weaknesses in internal controls. There could be people on sick leave, as you said. You're more dependent on individuals compared to last year. So what will happen? Do you have contingency plans and things like that? So what I normally recommend is also to add some sort of meetings that you sort of hope you would never be able to join, just in case there are some issues that comes up. But I think we need to keep in mind that this should be a positive journey for all of us, and to have fun during the process. And if the going get tough, please smile. I think that's a good recommendation for all parties involved in this process.
That sounds like a good key takeaway. Always smile. That's good for all of us, I think. For those of you who listen in on our previous webcast, we discussed a bit about the FSA's expectations and kind of communications on this topic as well. I would like to ask you as well, Camilla, what do you expect from Finansinspektionen going forward in terms of IFRS 17?
Well, I mean, we have a very good collaboration across the board. We have, as we're an insurance group, we collaborate with, we have regulated locally in Norway, Denmark, Sweden, and Finland by the relevant FSAs, and as a insurance group, we're regulated. We're a Swedish group, so we're regulated in Sweden, and then we have ECB and so on. So for the insurance group, obviously. But in general, we have had a good dialogue, and throughout the IFRS 17 implementation. But I don't. There's nothing in particular I would like to comment on in that sense.
That's fine. Anything from your side, Kjetil, on this?
On the FSA side?
Yeah.
Yeah, well, I think the FSA, they will be to some extent focused on local GAAP for statutory purposes. So if they do a local sort of investigation, maybe focus on the local GAAP, but then you have that part of the FSA that looks into the financial reporting, and they will be focused on the group reporting. I think they are also in the training phase now, try to learn how to understand how this really works. And normally what they do is to look into on a broader perspective the first year and then do a deep dive afterwards. So I expect them perhaps to, on the accounting side, to use this year and next year to really learn and then get provide some feedback to individual companies.
We'll just have to wait and see then. One final question to you, Camilla. What are you planning as next steps in terms of your IFRS 17 reporting?
Well, I think the next steps for us will be to, I mean, a bit like we've been talking about so far, it has been a big learning curve this year in terms of how to run the processes, and we would like to make them even more efficient and stable in how we want to run them and so on, from an internal point of view, I guess. And then we will obviously also have a lot to do in terms of still integrating Denmark Life into our entire business. So that's a big focus for us as well.
Yeah. Any final comments from you guys?
Well, I said keep smiling because I mean we really need to make sure on all sides of this, if you're a producer, if you're an auditor, if you're a consultant, to really collaborate to make this an exciting journey and a positive journey. And it's a historical moment as well because you are doing things the first time. And we will set then the standards for the next few years. So I think this will be a good opportunity to learn more and get to know each other better.
I think that was a good summary of IFRS 17. It's a good learning opportunity, and hopefully we will get to know each other a bit better and always smile. And I think I'll leave it with that. If no one else had any more comments. Thank you very much for listening in, and sorry again for the technical issues we had in the beginning. We will also learn, so hopefully the next time will be even better. Yeah, thanks for listening in.